Taxes. Not something we all love to talk about. In fact, I've rarely ever seen anyone say, I'm off to have a conversation about my taxes with a smile on their face. However, we have to know this is one of the most important things to talk about for those that are actually thinking about the distribution phase of their financial life. What do I mean by that? Most of you that are listening to this are in the growth phase of your financial life, meaning you're putting money in to grow accounts for some goal in the future. That's awesome. Some of you may be there for 40 years, but the day will come, hopefully for you, that you go into the distribution phase, meaning you're distributing your assets from that savings. You're no longer putting money in to grow those, right? You're retired. And one of the most important pieces in that is, of course, how are we going to invest it, right? All of those type of questions. That's not our talk today, but I do think that is the foundation of a good retirement plan, no matter if you're 5, 10, 15, 20 years away. But I think that what's not being talked about enough is taxes. What do I mean? There are only 3 different types of taxes you're going to see from accounts in distribution: income taxable, capital gains taxable, or no tax. Those are the 3. In one way or another, if we were to look at all of your wealth, they're going to go in one of those 3 buckets. Here's the point. If all of our dollars are income taxable, now we see a high majority of clients with a lot of money income taxable because they got deductions in things like 401ks and IRAs over these years. That was still a smart move, but don't forget, in distribution, that will have an income tax. Okay, well, capital gains tax. I put dollars in, invest it, on that gain, I'll have a taxation, right? And then no tax. But here's the point. If we have a lot of money in the income taxable piece, you know how our government has set those tax brackets. This much money gets taxed here, this much money gets taxed here, and so on. Have you ever thought about capping your tax bracket? Capping your tax bracket. Could you come into a year in retirement and say, I'd like to not go over this amount of taxation? What's the only way that the answer will be yes? If you have money in this account or this account, capital gains or no tax, right? Because if it's all in income taxable, do you have another choice if you still need money for your lifestyle? No, you have to take it here. And that dollar may have just gotten taxed another 10%. Who knows what the rates will be? So at 49 Financial, we want to open the door to say tax diversification is one of the things we all need to be talking about more, and we need enough in each of the 3 accounts so that we can make all 3 accounts worth as much as possible, but also that we can actually play defense in retirement, not just totally subject to wherever taxes go during our retirement years. No. If you have money in all 3, you have at least some say, because you're going to be able to pick and choose which accounts are being taken from in that given year that will give you the lowest tax burden possible for your financial plan. And that is tax planning for the distribution phase of retirement.